But we're going to be focusing on real estate, and who better than Abhishek Lodha, MD and CEO at Lodha Group, to talk about what their IPO plans are, the debt on the balance sheet. Lots of questions for him. Abhishek, great to have you in the studios. Good morning, firstly. Let's get the elephant out of the room. What is the issue with the dollar bonds?
The issue with the dollar bond is the lack of understanding.
Okay.
The dollar bond is worth less than half of the value of one of these towers we have in Lower Parel. It's nothing.
2,000 crores to put a number.
2,000 crores.
Okay.
We are cash
it's
collection.
Nothing in compared to your overall debt, or it's nothing
in compared to our cash flows.
What?
Our assets or our cash flows. Okay. Our assets valued last year by Knight Frank in August. Not the development value, but the current value was 70,000 crores. Our cash collections last year was 9,200 crores. Our EBITDA is 3,100 crores, which is probably amongst the top 50 corporates in the country. And this 2,000 crore due is 9 months out, and we've made arrangements for it. In terms of trading, this has never been traded. These are high yield bonds in the international market, and they're very thin trading. The average quarterly trading on this bond is 50 crores or thereabouts. How do you discover price on it? Any guy who wants to sell $2 million, 15 crore का जिसको बेचना है, उससे price down हो जाती है. फिर next month up हो जाती है. This bond was at 82 in December, was at 97 in March, is sometime in the 70s today. But more importantly, if this was truly reflective of our credit performance, this was 82 in 2015.
Okay.
2015 से अभी 2019 हो गया. We have an impeccable track record with Lodha. People don't ask delivery होगी कि नहीं, project बनेगा कि नहीं. आप हमारे लिए standards बहुत अलग हैं. That's a very different set of standards we are held to. But that's not the point. The point is this bond is a very minuscule part of our cash flow, and we have full arrangements in place to do it. If you ask any big corporate or any NBFC that can you show me the definitive way you're going to pay a liability 9 months out, I don't know how many people are asked that question. The point is we are the largest real estate developer in the country. We are the only one with an international bond and an international rating. So we get undue attention. The fact of the matter is that on the ground, the business is performing very well. This bond is a red herring. It will get paid out in full on the due date. We've serviced every interest on due date. We've serviced everybody on due date. You can ask anybody in the market whether there is a problem. In reality, there are people who have never dealt with us and they have perceptions and comments because they think real estate is in a bad place. But our sales are doing exceedingly well. Our office and retail business is growing very well, and we are very comfortable with where we are.
Then why is your IPO delayed, Abhishek? Because I recall speaking with you almost a year back, I think, and we were just on the verge of you IPOing. Why the delay then?
Aisha, two things happened. We were ready to move forward with the IPO, and then ILNFS happened. I think from that time in August 2018 to today, what has happened to the primary markets, you are more aware than I am. Clearly, we are in no rush, and it shows. If we were in a desperate situation, we would have cut and gone to the market. We are not. And today we are in a situation where over the last 12 months, we've reorganized. We are now organized as a residential business and a rental asset business, which is our office, retail, and logistics. And we've opened up two options before us, which we'll execute over the next 2 years. Either an IPO for the residential business or quite likely a REIT for our rental business. Because you clearly see today, while the primary markets for IPOs are not very strong, the REIT market is performing quite well. You've had one REIT, it has performed very well. There are other REITs which are likely to happen. In general, there is a compression in yield in the country. Interest rates are coming down, and therefore the value of rental assets is going up. And we have a huge rental asset base, means just our ready and under construction. I'm not talking about anything in the future. At current values are worth about 15,000 crores. So we will probably, be able to do either of those two options over the next 2 years.
The general view is that there is a lot of unsold inventory in the real estate sector, and that will keep prices under pressure, that will depress margins. What is the current state of affair with your company?
I think there is definitely a situation where there was a lot of supply started off in real estate in India between 2010 and 2014 in premium housing.
Okay.
Because at that point in time, everybody used to think that premium housing is nirvana, sabko 50% margin bana. Everybody wanted to make those kinds of margin. So clearly there has been oversupply in that marketplace, and you can see that in parts of Mumbai too. Thankfully, Mumbai, because of its geography, doesn't have the same quantum of oversupply, but definitely in the place you're sitting at, Lower Parel, there is oversupply. And yet, in Lower Parel, month on month, between our two completed projects, which are around you, the World Towers and Park, we're selling 150 crores a month. 150 crores a month just in Lower Parel is equivalent to probably the sales of any other developer across his portfolio. Across our portfolio, we have, in spite of this sort of credit slowdown in the economy, this year, since April onwards, we've been selling 600 crore rupees of new sales every month. More importantly, we are collecting 600 plus crore rupees every month from our customers because we construct so much. And that is the fact that real estate was oversupplied. Supply is reducing, moderating right now. All the sales are going to the top credible developers who have a track record of delivery. Just to put that in context, last year alone, we delivered 10,300 residential units.
Okay.
And about 9 lakh square feet of office and retail space. 10,000 residential units is the sum of all the other developers in Bombay put together. So when you deliver so much, consumers buy. Because ultimately in India, there is an inherent demand for housing because of our income and our demographic.
Yeah, nuclear family concept is taking over.
Bilkul, that's the demographic situation in our
I'm just going to take the clock back, and let's say August 2018, when the slowdown talk was not biting us, was not haunting us. Before this happened also, real estate was not doing exceedingly well. Now you can feel the slowdown. Earlier you were able to smell the slowdown.
Yes.
Now slowdown is biting us. So between August 2018 to August 2019, what has changed for your business?
What I would say has changed for our business is that we've become more prudent.
Okay.
We have focused on making sure that we are value engineering every spend that we do. We are even more focused on delivery than we were earlier. And that's a very clear mandate. I said we never slow down construction. And that's why you see all these gigantic constructions all over Bombay, which are all built as compared to situation in other parts of the country or even parts of Mumbai where developers slow down their projects or don't deliver their projects or whatever the case may be. So we become more prudent. We are more focused on delivery. On the sales side, while we're averaging about 600 crore rupees a month this fiscal, last fiscal we were averaging about 650 crore rupees a month. So you would say sales are flattish because the festive season is yet to come. But you can say it's flattish to minus 7-8% depending on which way you cut the numbers.
Abhishek, tell me, what is the total debt on your balance sheet right now? And all these sales that you're talking about, are they generating enough cash flow to try and retire that debt anytime soon?
So
leaving alone the IPO and how much you're
so we're
looking
not
to
talking
raise.
about any public market event, just
Sure.
our business. And that's I would say the charm of this business. Just our ongoing residential projects, which are either ready, completing this fiscal or next fiscal, are going to generate at today's prices 27,000 crores.
Okay.
The cost to complete is 9,000 crores. So the residual 18,000. So just the projects which complete this year or next year will pay off the entire debt.
Which
Just-
stands at?
Sorry?
Which stands at?
17,000 crores is the Indian debt. And in addition to that, we have 5 crore square feet of ready to start projects which are worth about 35,000 crores. We have a land bank of 4,000 acres completely unencumbered, which is worth another 20,000 crores. We have about 15,000 crores worth of office and residential projects. And we have about $600 million pounds, which is going to come from our UK projects, which are both, one is complete and one is completing by December. It may take slightly longer, 12 to 24 months because of what happens with Brexit. But overall, if you add those numbers up, that number is over 1 lakh crores from what we have already owned and partly started or may start in the future, but our own land, our own assets. Against that, we have to pay off 17,000 crores a year, and that average debt maturity is 3+ years. And that's seen in the performance. See, we've talked about the slowdown. More important than the economic slowdown is the credit slowdown. Yeah. There is not one instance where anybody's had any issue with us. So, performance speaks, right?
Right. So you acknowledge the overall tight liquidity situation
Absolutely.
as of now. Pricing as well, as you said, has remained stagnant. Is that likely to continue?
See, this is how I see it playing down. Interest rate cuts have started in the country, but they have a long way to go. There is no good reason why with 5% salary growth, which is what is the average this year, a person should be buying a car at 12% interest rate or buying a home at 8.5% interest rate. Cannot work. 10 years ago, salary growth used to be 10, 12, 15%, and interest rates for 10, 11%, it used to make sense. So interest rates have to meaningfully come down. That is the hidden ammunition India has. I expect over the next 18 months, interest rates for a mortgage will be down to approximately 5 to 6%. So demand pickup will surely happen over 18 months. On the other side, supply is coming down. For the tight liquidity reasons, a number of developers are going out of business. Consumers don't have confidence in a number of not so organized developers. So supply coming down, demand demographically supported plus supported by interest rates. So I expect that the next 12 to 18 months are the best times to buy real estate because prices have not yet started moving up, and you can buy a floating rate loan and it will keep reducing as the interest rates are cut. So I expect that the market from this festive season onwards will start picking up. Prices I still expect to be flat over the next 12 months as this liquidity situation sort of works itself through the Indian economy. But the medium term, I would say if you ask me, in 2021, will prices be up or down from where they are today? I can tell you with almost 100% certainty in 2021, prices will be moderately up from where they are today.
But does that make you shift your focus from the premium segment to affordable segment, the kind of market conditions that are prevalent right now? Because I know large part of your focus is towards affordable. However, you may want to define that in a city like Mumbai, but yeah.
So Aisha, great question. We are the ones who started affordable housing for an organized developer way back in 2009 when the first credit crisis of 2008 hit. Last year, out of the 10,300 homes we delivered, 7,500 were what the government has categorized as affordable housing. Not my categorization of what a Bombay developer wants to call affordable.
Your categorization is the FI definition. We are not even going
just to put it in context, so 75% of our volume of our sales are coming from affordable housing, and that is definitely going to become bigger and bigger going forward, purely because that's a very underserved market. That's where the Prime Minister has said he wants focus of the developer community to deliver affordable housing. So what is now defined as sub 45 lakhs, we will deliver on that too, because we have the ability to execute. Building 10,000 homes in this country year on year is very difficult. We are the only ones who have the capability to do it. We have the land to do it. We have the cash flow to do it. And we will keep growing that volume. So our business will expand ever. We will do some luxury, etc. But definitely affordable housing will become an even bigger part of our business, just as over the last 3 years, we've grown our office, retail, and logistics business.
How are Palava sales doing? Is it fully booked out?
See, Palava right now is home to 110,000 people. More than 30,000 homes have been sold. But Palava is a new city. Palava will eventually be home to 5 lakh families. 20 lakh people will live there. That's the population of Chicago, by the way.
Okay, now to wrap it up, we are focusing on residential. Real estate or commercial real estate is where some would argue the stress could be large. Because, suddenly you don't have too many capex announcements. You know that corporates are cutting back. You got the whole concept of WeWorks and shared economy, which is now kicking in. What are your thoughts there? What will happen to real estate yields and prices there?
Yields are definitely going to become significantly low as interest rates cut. If the Blackstone Embassy REIT opened at 8.3%, today trades at about 6.9%. We expect that will shift to closer to 6 or even lower than 6%. And commercial real estate, in our view, very challenged on supply. Okay. It takes a lot of capex to build it. And Indian employment will grow. I don't know if you read The Economist this weekend. India, they're saying global banks are now making India the hub for their global operations, not just back offices. So India's cheap manpower but good quality work ethic, cheap real estate, and the fact that the government is wanting to attract foreign investment will continue to ensure that we have job creation happening across different sections of the economy. And I believe that commercial real estate is an area which will continue to have very, very solid growth because it takes a lot of capital investment to build it, and India doesn't have that kind of capital.
Appreciate your time. So glad you could join us, and certainly hope to see much more of you going forward.